10 mistakes to avoid in trading stocks. Welcome back to the Lemmy XPlane Show. I'm your host, Sasha. In today's video, we'll be discussing 10 common mistakes that traders often make when dealing with stocks. As Warren Buffett once said, the stock market is designed to transfer money from the active to the patient. So, let's learn from these mistakes and become better traders. But before we begin, let's talk about the dangers of penny stocks. The danger of penny stocks. Penny stocks can be tempting due to their low price, but they come with significant risks. Warren Buffett wisely advises against them, saying, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Penny stocks often lack fundamental stability and can be manipulated easily. Always be cautious when considering them in your portfolio. One of the most common mistakes traders make is overtrading. This involves making too many trades, often due to emotional reactions. Remember what Warren Buffett recommends: the stock market is not a casino. Overtrading can lead to high fees and taxes, eating into your profits. Another mistake is neglecting a well-thought-out trading plan. Without a plan, you're like a ship without a rudder. As Buffett states, you need to have a consistent approach. You need to have a consistent value system. Stick to your strategy, set clear entry and exit points, and manage your risk effectively. Many traders fall into the trap of chasing recent performance. They buy stocks that have already surged in value, hoping for quick gains. This behavior goes against Warren Buffett's wisdom. The stock market is a device for transferring money from the impatient to the patient. Instead, focus on long-term fundamentals, not short-term trends. One of the gravest mistakes is neglecting proper research. You must understand the companies you're investing in. As Buffett says, risk comes from not knowing what you're doing. Make informed decisions by studying financials, industry trends, and the competitive landscape. Now that we've discussed some common mistakes to avoid, let's conclude with 5 essential trading tips. Asterisk, stick to your plan. Develop a solid trading strategy and stick to it. Emotions can lead to impulsive decisions. Asterisk, diversify your portfolio. Avoid putting all your eggs in one basket. Diversification helps spread risk. Asterisk, learn continuously. Stay updated with market news and trends. Knowledge is your best asset. Asterisk, cut your losses. Don't let losing positions ride. As Warren Buffett says, the first rule of investing is don't lose money. Asterisk, patience pays off. Remember that success in trading takes time. Follow the patient approach advocated by Buffett. And there you have it, 10 mistakes to avoid in trading stocks, along with some valuable advice from Warren Buffett. By steering clear of these pitfalls and following our trading tips, you'll be better equipped to navigate the stock market and build a more prosperous financial future. If you found this video helpful, please give it a thumbs up and subscribe for more insightful content. Feel free to share your thoughts or additional tips in the comments section below. Thanks for watching, and happy trading!